Welcome back to Fast Market. It's now time for our cash tag segment. I'm Alex Coffey alongside Kevin Hinks. Joining us here in studio is TD Ameritrade Network contributor Jenny Horn. And from LikeFolio.com, the co-founder Landon Swan is with us as well. Good morning to both of you. Jenny, we're talking some Beyond Meat today, down $1.10 here ahead of the report. And this is a name that has been a tale of the different times, I guess you could say, because it's fallen in and out of favor more than just about any name that I've looked at over the past few years.
No kidding. And I think sort of when it IPO'd, it sort of took this whole market by storm, being this plant alternative, which, you know, we hadn't really had any companies like this. But now the space has gotten very crowded. There's so many different brands competing with it, one of the largest being privately owned Impossible Burger. But then Walmart also has its own brand of plant-based food. And then Target actually has Good and Gather, which is also plant-based. Plus, we also have Oatly, which recently IPO'd. So this space is getting very crowded. And I have to say that all of these names trade sort of with this volatility because there's so many unknowns. And I also think that they target a very niche market. But I have to say one thing about Beyond, and I think a lot of people sort of get it wrong, is when they IPO'd, there was so much backlash about how many ingredients were in these products and a lot of these fillers and, you know, things that were synthetic. And plus, it was the same amount of calories as a beef patty, so why would anyone be eating it? But I have to say that when was the last time anyone ordered a double cheeseburger and thought, oh, this is a really healthy food? I think a lot of people get this wrong, and this is just supposed to be a plant-based alternative, not necessarily a healthy alternative. But you consider, I mean, only about 3% of Americans consider themselves vegan. However, 1 in 10 respondents in a new 2021 survey actually said they've tried more plant-based foods recently. And then now there's this huge market, or not huge, but growing market of flexitarians, which makes up about 14% of Americans, which are people that do try these plant-based foods while still incorporating meat into their diet. So that is, I think, who Beyond is targeting. You know, it's not saying meat is bad, it's just saying here's a meat-based alternative. But ahead of their second quarter results today, I would say that expectations are not so strong, at least from what I could see on Twitter. They also have an extremely high valuation. They traded about 18 times the trailing 12 months. And really, I mean, the competition is stiff, like I mentioned, but so many people on Twitter have so many negative things to say, despite the fact that I think Beyond has done a really good job sort of bolstering its partnerships. Just even this week, they announced a partnership with restaurant chain Hopdoddy, and then also they expanded their partnership with A&W Canada to offer limited time plant-based chicken nuggets. Plus, we got news, of course, of their plant-based chicken, which I have tried. It is very good. I'm a little biased, but that's actually what our first tweeter today talks about, who responds to an article talking about this Beyond plant-based chicken, which says, innovation is at the heart of Beyond Meat, and this is the latest example of our mission to create groundbreaking, tasty options that are better for people and our planet. Love that this launch was covered in TechCrunch and that Beyond Meat is being seen as the tech company it is. So I really tried to find the case that this is a tech company. I think it's just because this brand is now making more innovative products. When it first IPO'd, it only had, of course, the patties. Now they have sausages and they have chicken, and I believe they're coming out with more options. So I think that's where this tweeter sort of got the idea of the technology, because there is some technology in creating, of course, synthetic meat. But what I have to say is that on Twitter, to my dismay, most people are very, very negative ahead of this report, and it was actually very hard to find positive tweets, which our next tweeter sort of encompasses the sentiment I was seeing on Twitter today, which says, everyone is short Beyond going into the earnings release while it's holding support. It's the perfect storm for that lemon with a surprise beat. So I would say, I mean, you know, it hasn't not had the greatest week. It's pretty much flat on the year. It's been a boring year so far for Beyond in terms of, you know, it hasn't really, you know, grown much. And Landon, I know that you mentioned that the chicken launch was disappointing and that plant-based mentions are down. And so I said I'd be tweeting more about Beyond, which I have been, but I have a feeling your data is not too positive.
Yeah, you're right. And I'm trying not to be biased because you and I are very different as far as our food preferences. And, you know, if I'm thinking, if the goal is to taste like meat, then why not just eat meat? I mean, that's where it's at. If it's not healthier, if it's the same calories. But there's other reasons. I get that. And, you know, we're not opposed to making money on the upside. We were bullish at the IPO from 70 up to 240. So LikeFolio data is, you know, that's what we listen to. Unfortunately for Beyond investors, right now it's looking pretty bearish. We've got mentions of the company at levels that are extremely low, back to 2019 levels, actually down 45% year over year. You know, we talked a couple of days ago about that correlation of data to revenue, our data to revenue, and That varies from -1 to 1, and the score for Beyond Meat is a 0.91, which is off the charts. That means that the more people that talk about it, the higher the revenue. The less people that talk about it, the lower the revenue. It's a very good correlation between those two. And Beyond Meat data is very low. Not to mention the fact that, as you see here, the plant-based diet, people following that type of diet is also off quite a bit year over year. It kind of had a little peak there for a while, and I think that there's some novelty to it, a little bit of a fad potentially, and people try it, and I don't think that they're sticking around. Of course, they do have a lot of competition. Impossible, their data looks similar, other than the fact that Impossible's happiness is actually higher than Beyond Meat, 78 versus 74. So all in all, everything's looking fairly bearish. We actually put out an alert for our members back in October when the stock was at $170 to be short this stock. We're happy now that's down to 120. Going into earnings, our data, as you know, we have a score from -100 to +100. Beyond's coming in at a -67. So pretty strong numbers on the bearish side. Of course, nothing's a home run, nothing's a lock, but just with the purchase intent correlation so high and just all the data sort of pointing down, I don't like where it's sitting at right now. However, I will say, from a technical standpoint, if you look at the chart, it's been kind of in a sideways trend, as you mentioned, but it's sitting right at support. So that kind of worries me. Plus, if everybody's bearish, I'm a little bit of a contrarian by heart and by nature, and it worries me to be sitting at support where everyone is bearish. So you could be wrong. You could get the flip. That's my caveat. But I will say all the data is pointing down.
All right. It's time to have our little come to Jesus moment on Beyond Meat, Jenny Horn and Landon. And here's why. Plant-based chicken tenders is their new thing that they came out with in July. Okay. If I was Tyson Food or if I was any maker of chicken, I would sue them to get the word chicken taken out of that name, because there is not one piece of chicken in plant-based chicken tenders. This is a fad that was extremely popular when it happened. And I think slowly but surely Landon's data is starting to show that it's starting to ease. And I would be very careful about Beyond Meat, because though it has filled a gap, I think it's an extremely small gap. And Jenny Horn, Landon, your data is clearly bearish. And Jenny Horn, if you saw the marinated strip steak that I ate last night, you would be mad at me how big and how good it was. But that being said, this is a name, TD Ameritrade Network Studios are located in the Marshall Fields building. So these iconic brands like Beyond Meat, that doesn't mean they're going to last forever. This has to keep getting accepted by restaurants and chain stores and sales. And, a dramatic drop off like that means people are trying it, Landon. Correct me if I'm wrong. They're trying it and not going back to it. Landon, your numbers are clearly bearish. I'm not really bullish, but I get what you said about when everyone's bearish, one good thing could make this stock go up. Landon, give me your final thoughts on what you think about that. I think it's funny that these people get to call plant-based and name them meat. Plant-based hamburger, plant-based chicken. It's not chicken.
You know what? I think that is a fantastic legal strategy for Tyson Foods. If they went after them like that, that would be unbelievable. And it's a good point. There's none of that in there, so it's not chicken. They shouldn't be able to market that way. Maybe they put it in air quotes or something. I'm not sure. But I can't tell you, if you guys remember 3 months ago, I was on the show. I was also bearish on Beyond Meat. They missed on revenue, missed on earnings. I think the stock traded 10% lower following. So we have a very, very good track record with this stock. Correlation super high. The retail sector last quarter, they did talk about how it's doing better. I think it was up 27% year over year. But the problem is, that's not where the big sales are going to come from. That's not where the home run play for this company. The home run play, in theory, is getting into food service, getting into restaurants. That was down 26% year over year in the U.S. And if you think about all the problems that restaurants are going through right now with worker shortages and closures, and they're having to streamline their menus. If they're going to cut their menus, if they're going to cut a few of their core items out, then of course they're not going to add these new plant-based items that are sort of iffy as far as consumer demand goes. So Beyond is facing a really big uphill battle. The only macro trend that's really helping them is the fact that chicken prices, real chicken prices, have actually gone up quite a bit. I don't know if they're actually competing with chicken or not. My gut says that they're not competing with chicken. It's more of a, you either choose this lifestyle or you don't. But that could help them if someone says, you know what, chicken prices are high, I'm going to go for the fake chicken. I don't know. But just overall, everything's down on this company. Mentions and just purchase intent, happiness, sort of so-so. But I do think, based on what you're saying, that, it does look like, and look at this chart, it looks like people tried it. They had an open mind. A lot of people flooded in. Sales started off strong, but they just didn't stick around for whatever reason.
Okay, so I have to say, Tyson chicken tenders, have you ever looked at the ingredients? Because it's like half real chicken, half a lot of these same soy-based proteins. So I have to say, people have all this outrage about the ingredients, they're not real chicken, whatever. But if you actually look at a Tyson chicken tender, it's oftentimes a lot of fake meat too. So I just saying, Kevin Hinks, but that is my own personal bias. And I have to say that go to any restaurant now, there's usually a plant-based option on almost every menu, and 9 out of 10 times it's usually a Beyond burger. But obviously this hasn't really helped its stock price this year, and some of the price activity we're seeing. And so I guess, Landon, I think the key is, like you mentioned, really just getting into these restaurant chains. We've seen them try to work with McDonald's multiple times without really any fruition of that sort of happening. But I have to say that I don't believe this is a company that's left for dead, because I see it on more and more menus everywhere I go, probably because I order it. But also I just think that, the more restaurants partner with this company, a big chain like McDonald's is huge for them. And also this stock moves. I mean, sometimes you see Beyond up 10% without even real news. So that's something, from a trading perspective to keep in mind. And, I know I'm completely outnumbered here. I don't even know if I have a question for you.
Well, Landon, let me jump in here, because I think it's a lot simpler on the long term. I think the short term, it's hard to tell where you guys stand, all of you. I think you all are so unbiased with this. But on the long term, Landon, this flexitarian that Jenny mentioned, I actually think that's a real thing.
Thank you.
But it's never going to be a staple in someone's diet if it's a premium product, especially if we have real food inflation. That's a real thing that American families, global families are going to have to deal with. We're not going to have the luxury to go spend $2 just to switch things up. And so, Landon, my biggest question to you is, they've got to get this to a point where it's cheaper than regular meat, right?
I think they've got to get it to a point where people really like it. Like it's got to be a decent price, I think, but it also has to get to the point where you try it and you say, you know what, I'm going to keep eating this multiple times, and I'm going to come back next week and the next week, because I think where they failed was they got a ton of buzz, they got a ton of early adopters, but they just didn't stick around, and that goes for all of the plant-based movement, as you can see here on this chart. So I think that's really the core problem, is they haven't found the right formula, or whatever you want to call it, to make it taste great and have either, you got to check some boxes. It's got to be either great tasting and or low calorie and or low cost, something. And they're kind of missing, I don't know if they're going 0 for 3 or if they're going 1 for 3. You guys can debate that on the taste. But as far as like the low calorie and the healthiness aspect and the cost, they're not there. So they've got to hit one of those two, and they're just not doing it right now. So long term, who knows? I'm not saying this company's dead, but I'm just saying that right now, everything that we've got is pointing downward. And I will say that I was really looking forward to this show, because I love the meat eaters versus the vegan debate, and I knew I'd get Jenny fired up, and I knew I'd have Kevin on my side.
Hey, Landon, final thing here as we wrap things up. Let's go to this plant-based diet chart one more time. That's down 37% year over year. Is it safe to assume those who are adopting this diet are sticking to it? Or do you have data about people saying, hey, I'm throwing in the towel on plant-based, I'm back to eating meat?
Actually, so this chart is not people saying I'm starting a plant-based diet. This is a chart of people saying I am doing a plant-based diet, and I'm continuing to do it. So the fact that it's trailing off is definitely a bad sign. And the way to figure out if somebody's following a plant-based diet, they'll tell you. So on Twitter, it's really easy to find out, and they're not telling us right now.
Hey, it's like CrossFit. It's easy to find all those who are talking about it and doing it at the same time. But hey, Landon, great stuff as always, the co-founder of LikeFolio.com. Really kind of a fun, light-hearted conversation here on a stock that's very interesting, Beyond Meat. Thanks as always, Landon.